Our market report. We do this market report every seminar just to keep people up to date on the stats that are going on in Calgary. Today's market report, we're going to focus on a few columns. I've got them highlighted right here. We've got the total sales increase 41% from this January to last January. Active listings down 10%. So we still have an inventory problem. We've had this inventory problem for about a year and a half now. We think it's a reflection of both the interest rate rise and inflation. People are sitting on their houses because they don't know where they're going to go if they do sell.
Yeah, one thing that's going to happen now, the 41% in sales increase, we have to remember last January was terrible, okay? So it looks like it's a huge number, but it's getting back to where it should be, Tim, like on sales volume. But what we're really seeing right now, which is really, really interesting, is that Tim and I went after a property in Cedar Brae on the weekend and went into multiple offers. I think at the end of the day, there was 11 offers. We didn't get the property. It's now sold. So it's sold for $665,000, no conditions. But what we want to stress, this property was in Cedar Brae. It was a great property. But previous to this sale, there hadn't been a sale of a bungalow over $650,000. So we knew that $650,000 was the ceiling, okay? And because it was going into multiple offers, we knew that at the end of the day, we'd have to go higher than that ceiling, and which we did, but we didn't get the property. And now what's happened in Cedar Brae is that the new ceiling has been raised, okay? So what you're going to see in Calgary is this happening in multiple communities. So if it's happening in multiple communities, people will be sitting there, especially investors, looking at it. And I had a JV partner that called us on the weekend. We've owned this property since 2006 in Tuscany, and the tenant's moving out. And same thing, she's looking at the market saying, well, these prices have never been this high. I wouldn't mind that money in my bank account. And I'm like, sure, if you want to sell, let's sell. So people will be making those decisions if it's investors or homeowners looking within their community, doesn't matter which community, and looking at it saying, wow, the prices are unbelievable. Maybe this is the opportunity to get out with ease.
Yeah, and we saw this same scenario in 2014 where we were going through that mini oil boom, and as prices were going up and up and up, people all over the city started to sell. So we had a really, really balanced market. We had prices going up. We had enough listings coming on to satisfy the demand. And then in 2015, the oil crash hit. So we're seeing a similar scenario to that build up in 2014. We just need to see the inventory come on, which we feel it's going to, and we're going to talk about it a little later. We feel it's going to come on because of the pent up demand, and people just, because they move, they have a job change, their marital situation goes through things, they're going to put their houses on the market. And we're going to see this market become more and more balanced as the year goes on. Hopefully gets into a regular balanced position. We'll have to wait and see if enough listings do come on. But what it's going to do is it's going to keep that steady rise in prices. And you can see that on the bottom line there. This month, we're up 13%. Now, we figure that by the end of the year, we're only going to be around 4.5% to 5% increase as a whole for the city. Last year was 4.5%, basically, from 2022 to the end of 2023. So we're going to feel that, we feel that's going to continue. And it just makes for a nice, healthy market, and it helps investors where they're seeing that steady appreciation.
Yeah, so the key is understanding which segments of the market are going to do better than the average. And Tim's going to get into a slide right now about what's going on in the condo market, Tim.
Yeah, so this is when Azad's talking about segments of the market, we're talking about housing types. And you can see from 2021 to 2023, the pink little pizza slice there goes from 15 to 28%, 29%. So it's almost doubled. The amount of condos that are being sold as a percentage of the total housing market, it's almost doubled in 2 years.
Yeah, and that's going to continue because right now they're building purpose-made rental buildings, okay? So they're not building condos for sale. So that's one thing. And then most people's affordability has been driven down into the condo market. So the demand's going to be there. And the best thing about if you're investing in condos, we're still not back at what the condos were once selling for in 2006 to 2010 in the new construction. You have all of these buildings that were 2-bedroom, 2-bathroom, 1,000 square feet. We're selling around the $460,000 range. We're still buying these condos under $400,000. So when we say this market's going to continue, and I mean, Tim, that's going to be a 12% growth rate to get back to the 480,000 range. You know what? We're not even where we once were. So we know those prices are going to come back. We know those same condos in Toronto or Vancouver start at about $800,000 if you're lucky. So we're well below where the big cities selling price is. And so it's very, very exciting for the condo market.
Yeah, and you can see in the single family home, the blue pie there, you can see how it's dropped. The percentage of the sales have dropped from 61 to 46. That's also a reflection of the building costs that have gone up, the resale prices that have gone up. So as we've seen these increases in the last 2-3 years in single family homes, a lot of people are dropping out of that market into the condo market, into the half duplex market, because the prices are just becoming too unaffordable for them. So we see this trend continuing. We don't know where it's going to end up, whether it's going to be 33, and then the townhouses and the half duplexes will be the other third. But it's going to continue, and we're going to see that percentage of homes sold, single family homes drop and condos increase. And we'll see that probably for the next 5 years. And you can see it in the small multifamily that's being built. Anywhere you drive around town, people are taking out rows of houses and putting up these 4- or 5-story, mostly wood frame building. That's a response of the builders and developers to the prices. When the prices of single family homes get too high, you're not going to put a first-time home buyer into an $800,000 home. So they're going to start out in a condo, no different than 30 years ago, a lot of people started out in the small bungalows in the older neighborhoods like Acadia, and they were paying the $200,000, $150,000 mark for those small bungalows. Well, now those bungalows have been priced out of the range of the first-time home buyers. They're in the condo market now. Yeah. So that's just one slide. This slide actually came from the Calgary Real Estate Board market forecast, which every year in February, they forecast how they think the market's going to go. Our next seminar, we're going to delve deeply into the whole forecast. We'll have all of the data that they spit out today and gave to us, and it was just way too much to put together for today. So we'll do that at our next seminar.